Daniel, I just want to talk about the Chinese economy, and there are some very interesting noises coming out of the economy at the moment that would suggest that maybe there are some trends that are being concealed from the market that we should take note of. And I'm much minded to focus on this comment around loans to private enterprises. You would have seen this through the weekend with the Chinese banking regulators saying that the financial system, the banks, must continue to extend loans into this part of the economy. Yeah. Is there a risk that actually we continue to see a withdrawal of liquidity for the private sector enterprises that, quite frankly, have got an increasingly smaller part of the business pie at the moment?
Yeah, absolutely. I think that the situation in China is very complicated because the government wants to do two things that are almost contradictory in nature. On one side, it wants to deleverage the economy, and on the other side, it wants to incentivize lending precisely to the sectors that have driven the largest part of that debt increase. There's another problem as well. The non-performing loan ratio in Chinese banks is widely challenged, and we all disagree, or at least question that it's so low. Additionally, the PBOC keeps injecting liquidity in order to achieve better rates of growth. So it's a very difficult balance, because on one side you try to incentivize credit for the growing part of the economy, but at the same time you have a vast majority of businesses that are not generating returns above the cost of capital. So it is a very difficult issue, and it comes down to the following thing, is that China cannot grow 6.5% and deleverage at the same time. It's impossible. Its entire country model is based on debt.
So can we get into what's reflected in the stock market there? Because the Shanghai Composite was on the most horrific course for investors this year, I can put it that way. It was falling, it kept on falling, it was falling again, it kept on falling, and then reached a low. Yeah. Since then, since that low point in October, we have seen a change. The market's gone up, then there's been low points. The market's gone up, there's been low points. But every low point that's been marked since that low in October has been higher. Yeah. Are we now seeing a change in course after what has been a very grim outlook for the Shanghai Composite?
In order to be bullish about the Chinese market, you need to believe that the yuan will not devalue further. And I think that this is something that very few people tend to put together, is that the devaluation of the yuan has been an integral part of the collapse of the market. And in a market in which so many companies pledge shares in order to get financing, etc., it's almost a self-fulfilling prophecy. And the earnings season hasn't been very good. We have seen some of the fastest growing companies growing a lot less than expected. Therefore, it needs to be a stabilization both on the monetary policy and also to see a little bit of improvement on the headlines about trade and about the growth of the economy as well.
You said that you didn't think countries would defend their currencies, that the holding reserves would be the most dominant factor. Does that apply to China as well when it comes to defending the yuan?
Well, I think so. I think that China is, in my opinion, doing the wrong thing by continuing to devalue the yuan as a stealth move in order to offset the impact of trade sanctions, etc. Why? Because trade sanctions tariffs can put a little bit of a dent on 10% of the economy, but the devaluation is hurting the entire economy, because it's an economy that needs a strong yuan in order to improve the purchasing power of salaries and to make households be able to repay their debts. So inflation is rising, the economy is getting slower, and I think that the problem here is that the Chinese are doing exactly the same as so many other countries, is that they're trying to offset their internal imbalances by devaluing the currency. As such, I think that there's very likely that the yuan can break the 7 barrier, and that is not a bullish signal for the Shanghai index, unfortunately.
All right.